Hi, guys. Welcome to the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Justine Palefsky and Tas Amina of Kindred, a really cool new home swapping platform. We talk about founder dating and how important that is, raising capital from strategic angels, and how the startup and venture market is changing and getting tougher for founders. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. It's really going to help you get ready to raise capital. To get instant access to this, please click the link in the first comment. While you're there, please leave us a nice comment, hit the like button, tell us what you like about this show. And last but not least, if you enjoy this conversation and think someone else would too, please share it with them. Hit that subscribe button to get all our latest episodes. Thank you. Sit back and enjoy the chat.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Justine Palefsky and Tas Amina of Kindred coming to us from San Francisco. How's your day going, ladies?
It's going great. Thanks so much.
Going well.
Lovely. What is Kindred? What do you guys do?
So Kindred is a members-only home swapping network that we started to make it possible for people to travel much more and pay only a fraction of the cost of what they normally would have paid to stay in a hotel or an Airbnb. We're essentially a matchmaker who connects people who have something in common with one another, who they trust, to stay in each other's homes instead of leaving their home open when they're gone.
Yeah. So it's funny. This idea is, I guess, been around a little bit. My parents in the 70s or 80s, a long million years ago, did a home swap. I remember this as a kid. I'm sure it was very complicated to do it back then without the internet and everything else. How did you come up with this idea? What was the backstory?
Yeah, it's so we came up with this really when Taz and I were both sitting in the pandemic, when we were working remotely and in remote flexible jobs for the first time. And we wanted to, like many other people, wanted to be able to move around a little bit more now that we weren't limited to staying in our office city. We wanted to take advantage of that flexibility and spend a couple of weeks in New York City or in Miami or in Los Angeles. But it just felt incredibly expensive to have to pay a couple $1,000s or more to spend a week somewhere. And so we were exploring different business models and ways that we could unlock this kind of radical flexibility in a more cost-effective manner. And we considered a bunch of different options and ended up actually landing on home swapping. And as you mentioned, home swapping is not a brand new idea. This has been around for a while. The Craigslist home swap section has existed forever. Why are more people not swapping homes? And what we realized was that the kind of legacy sites of the past were essentially classified ads. And they really missed two important things. One is trust. If you are going to be letting somebody stay in your real personal home, you want to have some assurance if something goes wrong, you're going to be taken care of. You want to be able to find people who you have something in common with, who you trust, who you feel like are good people. And if you're going to go stay somewhere, you want to know that that home has been vetted and it's safe. And then the second thing was convenience. It's just really inconvenient to have to deal with preparing your home for a stay, as well as having to go reach out to dozens or even hundreds of people to pitch the idea of a swap to see if they're willing to make a trip happen. And so we realized that if we made a trusted experience that was really convenient, that this is a really compelling way to travel, because you can stay often in better, nicer accommodations with workstations and Pelotons and actually pay a literal fraction of what you would have paid for if it were a rental.
Yeah, I mean, that makes sense. Airbnb, we use it when we go travel, but it is expensive. It can get really expensive to use, VRBO and Airbnb to stay somewhere. When they tack on all the different charges and fees, it is we've been kind of actually going to hotels more and more just because we're kind of fed up with the fees. So I have a question on how the model works, because you're kind of making a market, right? You're making a marketplace between different people, but it seems like the challenge would be very hard to not only have inventory of physical places, locations, but also matching up time, right? And not only time, like I want to take a vacation in June and someone in France does too, but maybe I want to go for a week and they want to go for 2 weeks. So how do you sort of merge and match all these different criteria?
Yeah, we have, so not all of our swaps have to be one-to-one. So that's one thing that we do introduce flexibility for. And we have this concept of credits, which is effectively based on time. So you give a night to get a night on the platform, which means that if you make your home available and someone stays in your home for one night, you earn one credit that you can then use to book any other home on the platform at a later time. So what that means is that it takes away that one layer of complexity around matching, right? Because you don't have to worry about that time matching component anymore. And you also don't have to worry actually that the place that you want to go to also wants to come to your home, because, if you're going to be away for a wedding or a work trip or whatever it is, you can just make your home available on Kindred, and then just earn those credits, rather than leave your home empty, which is great, because why do you want to kind of leave your most expensive asset, unutilized? And you can then turn that into travel credits, because now you can use that to book any other home at a later time.
That answers it very succinctly. And do different geographies earn different credits? Or in other words, if I'm at a really sweet compound in the south of France, does that earn me more credits than a, I don't know, one bedroom in San Francisco or something?
Right now, all credits on the platform are equal. So one night equals one night anywhere. And the main concept behind that is that we're actually standardizing on time, right? Where it's not about the value, because turns out, even if you own a 3-bedroom home and you want to go to New York City, what you're really thinking about is how much money am I saving by going to this Kindred home, right? So the value to you is still quite high, and it doesn't necessarily have to be a value for value swap. And so we found that our members are actually way more excited and think that it's fair to do time for time swap, which is, I just care about the one night in this, I'm getting one night in New York City and someone else is getting one night in my home. Not to mention there's this, how do you compare value? Because, staying one night in a short-term rental prices isn't necessarily the long-term rent you're paying somewhere, right? So the right comparison isn't necessarily the one night of rent. It might actually be one night at an Airbnb. So we found that kind of to remove, again, our goal is to keep this simple. Our goal is to keep this easy and seamless, and really foster a sense of community here, because that's where the trust is coming from. So, we do it. All the credits are equal. We do one night equals one night anywhere.
It makes sense. Do you find most people contributing, to earn credit, contributing their place to earn credits are, hey, I'm going away for 2 weeks, or is it folks with a second, third home that, sits unused for 9 months out of the year?
Yeah, it's almost entirely primary homes. And that's one thing that we think is really, really exciting and interesting about this model, because as Airbnb, VRBO, other vacation rental sites have increasingly professionalized their supply, most of the homes on these platforms are full-time Airbnbs or rentals. And that means that we sort of need a world where there are millions more vacation rental, like full-time investment homes out there, instead of being able to take advantage of the existing inventory of primary residences. And so we're excited to be able to unlock this net new inventory and bring that to market. All of these primary residences, the people and their friends and their friends of friends, whose lovely homes sit empty for a couple weeks or a couple months at a time, because there's no great trusted platform that would be really convenient for them to join with their primary home that's only going to be sitting empty for a couple weeks or a couple months in a given year.
Yeah, totally makes sense. Can you talk about any, how many homes are on the platform, or how many matches have been made, or anything like that, just to put it in context?
Sure. So we have booked close to, I think we might actually be at 1,000 nights on the platform. We just came out of stealth maybe 3 or 4 weeks ago. And since then, we have gotten about a little bit over 5,000 membership applications to join that we're working our way through.
Oh, wow. Mm-hmm.
Yeah. And the other thing that I would mention, but when we were, we're accepting homes right now across North America. So that includes Canada, the United States, and Mexico. And we're working as fast as we can to be able to extend out to Europe, to be able to service swaps kind of all over the world.
Yeah, that's interesting. Very cool. What were you guys doing before this? Just out of curiosity.
Yeah, so I was working at a company called Homebound, which is a technology-enabled home building company, leading customer experience, brand, and design there. And before that, I was an early employee at Opendoor, which is actually where I met Tas.
Yeah, and just before Kindred, I was at Opendoor as well. So I was a product lead there, and I led new products in the seller product and pricing.
What does Opendoor do again? Oh, it's selling your home, right?
Yeah, exactly. It's making it a really easy way for people to buy and sell homes online.
Oh, yeah. Right. Okay. Interesting.
One-stop shop for all things home buying and selling.
Yes. Good. Excellent. Very, very cool. I love startups that are doing the underutilized assets. Like, you've seen this in, obviously, you can put your car on different marketplaces and make some money. You put your boat. I think there's a few of those boat bound and stuff like that are out there. People don't use their boats very much. I mean, it's really a clever, I think there's even one for tools, right? If you have like tools, you can put them out there. I forget the name of it, but yeah.
Camping gear, garage space, pools. And it makes sense, right? Like it's inefficient for all of these really valuable assets to just go unused. And it, especially with housing, it puts the world in a really sticky spot because instead of using our housing inventory efficiently, we are letting a bunch of homes sit empty for periods of time and then separately overpaying for vacation rentals. And that incentivizes investors to go buy up homes and convert them from primary residences to investment residences and turn them into full-time rentals, which in turn drives up the cost of housing. And it's really started a kind of a vicious cycle in a lot of communities. And we think that by just increasing the efficiency and giving cities and communities a way to feel comfortable better utilizing this asset that they have, their primary residence, we can actually not only create a better way to travel for our members, but from a community perspective, we can actually have a net positive impact on cities and on communities because turns out I don't have to go buy that home in Lake Tahoe anymore in order to feel like I have a Tahoe home. And so that's one more Tahoe home that's sitting on the market for somebody to actually live in full time. And instead, I just do a house swap with my friends who I met through Kindred in Tahoe for about 10 days once a quarter. And they come stay at my home in San Francisco. And we both feel like we have a second home, but we don't have to take another home off the market to do that.
One thing I'd add to that.
Go ahead, please.
I was going to say, just one thing I'd add to that is, so far, I think when we think marketplaces, we think about marketplaces that involve the movement of money, right? So that means that people are getting paid for monetizing that asset. And what that does is that over time, it favors professional investors to come in who have a lot of capital and who can come in and kind of, as Justine said, buy up that inventory. It doesn't matter what we're talking about. We can talk about homes, we can talk about cars, we can talk about anything. But what it does is whenever you introduce money into the system, it creates an incentive for people who have lots of it. And one of the things that, because if you have cheaper access to capital, then it's easier for you. It's like cheaper for you to, do that deal or contribute to the supply of that marketplace. That's actually one of the reasons that as Justine and I were building Kindred, we felt pretty strongly that, there were opportunities in the very beginning. There were so many opportunities where people came to us and say, hey, I don't necessarily have a home to contribute right now. Can I still rent a home because it's still a more trusted and better quality, whatever it is. And we made the conscious decision to say, no, we want this to be a give to get versus a pay to get model. And that is, I think, that is one of the first times I think that it's been done in this sort of like, again, home swapping being the only real example I can think of where that's been done in a marketplace environment, right? And again, by not focusing on the cash, what it allows is to create a product for the majority of consumers out there who are not necessarily looking to be professional hosts over time. Yeah. Everyone, more people travel than there are people that are looking to make money out of their investment home, right? And so we want to cater to the people that are looking to travel, not necessarily people that are looking to monetize their primary home, because we think there are good existing solutions out there already to monetize your primary home. So we're not looking to be another solution there. We're looking to cater to everyone else.
Very good. All right, one or two more questions. Let's talk about fundraising. Now that I'm thinking about this more, we had Swimply on this show, which is the swimming pools. You can rent out your swimming pool if you have a backup pool. And we had Neighbor, which is your parking spot. So, if people want to like kind of explore this space a little more, a few others. How do you guys charge? You're charging a membership fee, or what's the business model?
Yeah, we charge a $300 a year membership fee, which unlocks access to the platform, and then you can book any home on Kindred for just $30 a night plus the cleaning fee, and then $30 a night just covers the cost of coordination, insurance. That's a platform fee, not a host to guest fee. What Kindred is effectively doing is stripping away that nightly fee that you would otherwise be paying with an Airbnb or VRBO. So let's take an example. Let's say you're staying 7 nights in New York City. On Airbnb, you might be paying anywhere between $300 to $400 a night conservatively for that home. On Kindred, you're paying $0. You're not paying anything, and then you're just paying that service fee and cleaning fee, same as you would in any other platform. And so what that translates to is that for a 7-night trip, you're paying $300 to $500 total on Kindred, depending on the size of the home, versus something like $3,000 on Airbnb or VRBO. And so it really is, you're paying the fraction of a cost. And for that model.
And I guess to be able to go take a trip to New York, we would have to first earn 7 nights of credits by putting our thing out there, right?
And all new members, in order to kickstart there, all new members earn 5 credits as soon as they sign up for the community. So it allows members to sort of stay at another Kindred home and try Kindred, and at the same time make their own home available in order to start earning credits and kickstart that flywheel.
Kind of a simple, maybe dumb question, but like, our house is pretty uncluttered, actually. My wife is good about dumping everything off to Goodwill frequently, but still, what would we do with all our crap? I guess we'd have to build a separate closet or storage, or how do people manage it?
You can leave your stuff there. So we set expectations when we onboard every new customer around what to expect when you're staying in a Kindred home, because we want people to know this is different than renting a rental home. This is somebody's real home. In fact, we actually we require a Zoom intro between people before we confirm anything, so they can meet each other and make sure they feel comfortable. And so we set the expectation that there's going to be pictures of the family on the wall. There's going to be coats in the coat closet. This is a home, and you're staying much more as a house guest than as a renter. And so we do ask that people prepare their home in a couple ways that are actually really lightweight. It involves just like trying to put away things, especially like hygiene items that you don't want somebody using, like put away your own toothbrush, under the cabinet, things like that. And then we ship out a welcome kit to new members with some Kindred essentials. So Kindred sheets, Kindred towels, some toiletries, and a lockbox. And we help coordinate the cleaning end to end before and after the stay. And so when you leave, you can fold up your personal sheets and just leave the Kindred welcome kit there. And the cleaner will come out and put out the Kindred sheets and the Kindred towels so that when you're coming back that your guest was using the guest set instead of your own. And then they'll put back out the kind of owner set of sheets, towels, and similar items before you get back.
Yeah.
And two things I'd call out there as well. One is, I think as Justine said, the key word is house guest. I think a lot of the time when people think about short-term renting, they think about what it's like to go stay at an Airbnb. But what we want you to think about is like what it's like to go stay in your friend's home, and what is the etiquette, and how do you take care of that home, and what do you expect out of that home? And I think that should be how people view staying in Kindred homes, right? Because these are real homes of people. And again, as Justine mentioned, our goal is to connect you with people that you may already be connected with. Maybe it's a second degree connection or a third degree connection, or someone is a friend of a coworker that you used to work with. But the idea is that this should more closely represent a house guest than it is someone coming and renting your home and having those expectations.
Totally makes sense. All right, let's talk about raising capital. How much have you guys raised and over how many rounds?
So we raised a total of 7.75 million over a pre-seed as well as a seed.
Excellent. Let's just go chronologically. So pre-seed, was that before you built anything, or did you have some, was it idea at that point, or?
Yeah, we can kind of walk you through it. So, so Tas and I were both starting to think about wanting to start a company. We both went to the CEO of Opendoor and said, I'm thinking about starting something in this space, making it more affordable for people to live more mobile lives. And he said, that's great. I would love for you to do this. And Justine, you need to talk to Tas, and Tas, you need to talk to Justine, because you two would be an incredible power duo. And if you guys do something together, I will support you. And so that all happened before I even left my old job.
You didn't know each other.
We knew each other socially because we had both worked at Opendoor, but I didn't know at the time that Tas was interested in starting a company, and she didn't know that I was interested in starting a company. So we sort of went to our mentor, who was like, "You guys should talk," and we did. And so we spent actually a long time, and this is maybe a subject for another podcast because I know we want to get to the fundraising part, but we spent a long time doing founder dating and just getting really into the nitty gritty of what our partnership would look like and what we wanted out of this. And honestly, we ended up deciding on the space that we wanted to tackle and that we wanted to work together before we had really come up with the specific model that we wanted to go with. And so we ended up deciding we're going to do this. We're going to take the leap. Tas had already left Opendoor. She was on a break. And I was at Homebound and ended up finalizing my last day at Homebound, and we locked ourselves in a cabin with a whiteboard and some White Claws, and came up with a couple different models we knew we wanted to test out, and one of them was home swapping, and we ended up within about 5 days of my last day at Homebound, we incorporated and we raised our first $1 million on Safe Notes. And really the way that all came together, and what I would probably recommend to other founders is really starting with, if you have any real champions, who's somebody who's worked with you before, who knows you and can vouch for you, who has seen the results that you have. And so for us, it was people like the CEO of Opendoor and also the CEO of Homebound, the company I had just left, who really stood up and said, we believe in these women, we would bet on them, and we're going to put our money where our mouth is. And then it is so much easier to approach other people and say, hey, we already have people who are going to step up and make this round happen. It's going to come together whether you're in it or not, but we would love for you to be in it. And you're coming from more of a position of strength. And so really, we didn't end up needing to do a lot of cold outreach because we were able to say, hey, Eric, or hey, Nikki, who do you think we should be talking to? And kind of pull the thread. And each time we got a new angel or investor on board, often people said, hey, I actually have somebody who I think you should meet. And so we were able to have all of our intros actually be warm intros instead of kind of cold outreach, which I think really helped accelerate that process and is part of the reason why we were able to pull that first $1 million together in about 5 days.
5 days.
This is why that entrepreneur And this is why that like initial founder network and that entrepreneur network is so important, because having, chances are if you know a founder in your life and they've raised money, they know who, who you should be raising money from and who's going to be the most helpful and who's going to be the most thoughtful and who's going to be, with you during the good times, the bad times. And so, it's not that different. Thinking about bringing on an investor, it should, we have to be thoughtful there, because you are, in some ways you're tying your destiny with theirs, right? So you want to make sure you're being really thoughtful and really introspective and asking the tough questions when bringing on some of these investors. So any sort of stamp of approval there from people that you trust and goes a long way, and also easing your mind when raising capital and making that process quicker, because you kind of, you have the signal that you need faster.
That's amazing. So 5 days, $1 million safe round, seed round, very impressive. How many total angels is that covering?
Oh, good question. Maybe include. So we carved out, both Tas and I included some of our like friends and family to write really small checks. We knew if this thing became as big as we hoped and expected that it would, we loved the opportunity to earn some money for our parents and our siblings, and they wanted to support us. So we carved out some like $5K or 10K checks for some of those folks. But other than that, I think we had maybe like, I don't know, Tas, 7 to 9.
9-ish people probably total.
Sure.
Yeah, list some of them, but so we worked with Eric Wu and Nikki Peckett, who we talked about before, who were the CEOs of our last companies, a couple other Opendoor folks, including Gautam Gupta, who was Opendoor's CFO and COO, and then other friends of ours who had Box Group as well. So David Tisch and Greg Rosen,
Elad Gil.
And then other friends who were founders themselves, including Rohan Seth, who worked with us at Opendoor and started Clubhouse, or Steve Bartel, who is a good friend who started a company called Gem in the recruiting software space. And so we ended up
chairman of ClassPass, Payal. She's Kadakia as well. Yeah.
That's an all-star group. I mean, that's really impressive. This is like every founder's dream, is to kind of assemble this group like that. And I mean, it sounds almost too easy. I'm sure it wasn't, because you paid your dues working, for years doing stuff like that. But was the secret to that fast success with all these all-stars the fact that you got, Eric Wu and like a couple big name anchor angels first, and then that just really fed into the rest?
I think that helped, but really it was determined, I think that the most important ingredient for why it ended up happening that way was determined before we ever started a company, which is exactly what you were mentioning around our track record at Opendoor. Okay. If I were giving advice to any aspiring founder, I think the most helpful thing was being an early team member and having a huge impact at a company that was doing really hard things really well. Because Tas and I both ran and kind of started standalone business lines at Opendoor that are now doing over $1 billion of revenue a year. And that's pretty substantial impact. And the people who we've worked with know that. And so I didn't realize the value of being an early employee at a place like Opendoor wasn't actually going to be of course you hope that the equity is worth something because you joined early, and that's great. Actually, the bigger value is your track record, because then it becomes so much easier to raise money, and your peers then become your investors. Yeah. Our peers are now starting companies that are incredible. And, it's really helpful to have Jeff Collefson, who co-founded Fair, be somebody who you were in the trenches with, or Rohan Seth, as we mentioned. We have a number of friends who are starting their own companies. And that makes all the difference when it comes to these early rounds, when really people are just making founder bets. And so I think that all the work was done in those years earlier, where Taz and I were really heads down and just really kind of grinding on a very hard business for many years.
And by the way, that equation changes over time as well, right? Which is, again, as Justine mentioned, in the earlier rounds, what investors are really anchoring to are the founders, because at that point, we had an idea, we had, a very strong thesis behind why we thought that idea would work. And obviously, Justine and I had done a ton of work with each other to understand what our relationship would look like. Quick side note, one of the things that Elad Gil had mentioned when we were meeting with him, he said, the biggest thing that I look for is actually co-founder fit with one another, right? That's like one of the biggest reasons that companies fail. So that's just a quick aside of how important also it was that Justine and I were on the same page while fundraising, and that we'd had some of those conversations before we even went to the first person that we wanted to raise money from. But as I was saying, as time goes on, it goes from idea, which is very founder, you're betting on the founder, and as that idea progresses, now you're starting to bet on the business and the actual product, right? And the huge reason for that is there's a ton of iteration that happens from the idea to when you actually build when you're starting to scale the business, or you think that you found that product market fit. And during that time, what matters is much experience do your founders have? Have they built businesses before? Do they have experience being really proactive and really rigorous with the way that they manage and iterate a product? But then once you've found product market fit, now how good is that product market fit? How much revenue can you make? And obviously, founder fit matters there quite a bit still, and how you lead the company and how well you execute will always matter. But you have a little bit more quantitative proof for that once you start getting into later rounds in a way that you just don't have in earlier rounds.
I want to, it's good. I want to go off on a slight tangent just for 3 minutes. I want to keep us on track, but talk about the founder dating and, what questions were you asking each other? What process were you background checking each other? I mean, what were you doing to sort of do the founder dating? Let's touch on that, because that does seem important.
It was so important, and I'm so glad that we did it. We did a number of things. One, I read a book called The Partnership Charter. That is an old school book that is not tech specific. It is about running almost like family businesses, but it recommends putting together a charter with your co-founder where you essentially do a lot of pre-mortems and talk through, if scenario X happens, how would we handle that? And get really clear on areas of ownership and get really honest with what are our intentions, what are our values, and what do we want to get out of this? And what are our strengths and what are our blind spots or weaknesses, so that we can have some of these sometimes awkward conversations up front. And really accelerate our trust building process. So we kind of took that book and adapted it to be kind of more startup centric. And we literally wrote out a document. We talked really openly about not only what our strengths and weaknesses were. We also talked about our family history and our lives and who we were as people and our relationship with our parents and then also talked about hard questions like what happens if one of us isn't performing? How do we handle that? What happens if we disagree on employee number 5? What happens if we get a acquisition offer for $20 million 6 months after, incorporating? Do we take it? What happens if we're 10 years in and it's still, we still haven't made it? So there's a number of fantastic kind of questions that we asked ourselves. And then we also did a lot of references on each other, not in a secret way, but hey, who are the people who you've worked the closest with? I'm going to go talk with them and learn about what it's like to work with Taz, so that we had a much clearer sense of our skill sets that we would bring to the table and what we're like under conditions of stress, which is really important because sometimes you don't have the opportunity to learn that until you're kind of deep in.
Were there any areas that you guys were fairly far apart on that obviously you've done it, you've formed the partnership, or was there anything you really were pretty divergent on?
So I think that we were very aligned on values, and that was one of the reasons why I felt comfortable moving forward. And trust, and like I deeply trust Tas with like my life, and she has every password. She has like my social security number. She has every password to everything. Like I don't need to be in the room if she's negotiating like on my behalf. Like I really believe that she is at her core a very good person. And I think she really believes the same about me. And that's very helpful to not have to feel like, oh no, do I need to double check all the, all the things that she's doing? Is she going to try and oust me? Are we going to, and so like that alignment on values and kind of who we are as people, I think was very, very strong. Some of the places where we were more divergent is in just like styles. We're very different. Stylistically and in how we communicate and in how we approach problems, even like sometimes kind of opposite. And that has made this one of the most intellectually expanding relationships of my life. Honestly, is getting to know somebody else's psyche and their style and their approach so well. That's so different from my own, and kind of creating space for that. And so that's been something that's been a really kind of fun part of the adventure. Is getting to know the style that and kind of the Tas approach to a problem, which is really different from the Justine approach often.
Okay. Good.
And over time, I think that's really resulted in us seeing around a lot of corners, right? Because one of the things that it's allowed, I would say, is that the amount of trust that we have in each other allows us to split problems and kind of run with it. So we can kind of, there's so many things to do at a growing company. You can't really afford to have, both of the founders working on the same things and double checking each other's work and then, worrying about one another. And I think what Justine and I have done from the beginning is just say, what are our focus areas? Okay, you take this, I'll take this, right? And just to kind of run with it and trust that we're doing the right things. And obviously, we then kind of pull up whenever we have a big decision to make and say, okay, how would you think about this? And how would you approach this? But also being really good about saying, here's my thought process, but you are clearly the DRI here. You are the responsible decision maker here. So in those moments where if we do have a different way of approaching the same problem, we sort of, give our opinion or give our thoughts and kind of lay out our rationale as to why we think about it the way that we think about it. But it's also equally important to then say, but it's your decision because you are the owner of this area and you will be the person to make that decision. And what that does is, one, as Justine said, expand our horizon and make sure that we're thinking about, the different sides to every problem and what the outcomes could be. But it doesn't then create a situation where now both of you have to see eye to eye on everything. And now you have to, create an environment where you effectively have to mold into one person in order to move forward. It allows you to disagree and commit and move on because we have clear ownership areas and say, we are comfortable. You are the person making the decision and we are comfortable. And I'm comfortable with you making that decision, irrespective of what I think about it.
Okay, good. I want to keep us on track because I'm watching the clock. Let's get into just a couple more questions on the fundraise. So talk about the next round after seed, just anything notable, how'd you put together? And really what I want to get to is, any advice you have for founders, for female entrepreneurs, advice you'd give yourself if you were doing this all over again, any just kind of tactics and advice, but maybe first touch on, the more recent round.
Yeah. So what ended up happening was we got into the summer, we started pulling together the actual business, pulling together a private beta, and just started seeing a lot of traction. I think at the time we had less than 200 members who we had accepted. And between them, we had booked over 100 trips of just those 200 people staying at each other's homes. And that was a much higher match rate than a lot of our investors and even we expected. And we realized that when travel is so radically affordable, people actually relax a lot of their constraints. And we realized that this is kind of a recommendation-based user experience. And that would really, being able to spread our demand over our supply really increased match rates, as opposed to waiting on it being a kind of search bar kind of based experience where people put in their constraints and hit enter and see the results. And so that drove a lot of engagement. And then we had some of our existing investors say, hey, like, can I put in more money? You guys are have found something. And we said, no, and I think that's maybe ended up being a thing to say, because they said, okay, well, what are the terms that would make it a no-brainer for you? And then we ended up being like, well, we would probably take an uncapped note, like 5% discount. And so ended up actually deciding to raise 1.25 more over that summer on an uncapped note. And then we had been planning on pulling up to raise a real institutional seed. We knew we wanted to work with a great firm, especially one that had a lot of great supportive resources. We were thinking that we were going to probably pull up and run a process in the beginning of 2022, but ended up having some conversations kind of accelerate internally. And so we ended up talking to 4 or 5 people and didn't run a full process, but ended up deciding to go with Andreessen to lead the round. And then we were able to also kind of squeeze in there some other folks who we really love and wanted to be able to work with, who weren't necessarily leading, like Bessemer and Caffeinated Capital, and added some more angels. So I think that there's, it ended up working out. It's interesting because now we're at such a different moment in time. Like we announced that seed recently, but really we signed the term sheet around Thanksgiving. And that was a time when the market was really hot. Yeah. And there were these kind of fire sale sort of moments happening where people were like, oh, let me preempt you, and that's changing now.
Yeah. Let's touch on that. Yeah.
Yeah. Maybe Tas can share some of what we're hearing from our investors now.
Yeah, as Justine said, the market that we were raising in November is vastly different than the market that we're seeing now. And one of the things that really defines the market that we're seeing now is a lot of uncertainty, right? Which is there's generally, with inflation and recession risk, and generally, there's a lot of uncertainty around how investors want to deploy their capital. And I think there's a little bit of for looking to each other and saying, okay, what is, how is the economy going to perform? What is our ability to, to be able to sort of, for a lot of the companies that we have funded in the past to actually realize the valuation that they were funded at, right? So I think that's been the biggest adjustment, is that in the past, if people were sort of pre-revenue and pre-product, but still raising at high valuations, now you're starting to see a shift in the market towards proving out the business model and making sure that, you're not burning a ton of cash to get that incremental growth, that your burn multiples are in check, that your unit economics are sound, and you're growing with that lens. Whereas before, I would say that kind of everyone was just focused on pure top line growth numbers and not necessarily what was below the line. But now those below the line numbers matter quite a bit. And a huge focus that we're hearing from our investors is making sure that we're being thoughtful about how much we're raising and what valuation that you're raising at, right? So investors that are for founders that are raising out there today, really being thoughtful, not just about how much money you need, but also what that means for your next round. Because, if you're raising at a valuation that then in order to be at an up round at your next round, you have to raise, you have to hit unsustainable milestones, then it might not make sense for you to do that. Personally, now, we've been in a little bit of a fortunate position where we raised recently, are not necessarily capital constrained. And so we really have the room to hit our milestones that we set out for ourselves. The feedback that we've been hearing from our existing investors is plan for sort of plan for a longer time period than you think that you need to buy that sort of downside protection and insurance for your business, right? Because now more than ever, what's most important is that you have the capital to survive any length, right, of the downturn. And so we're hearing, at first it was, manage the business to 18 months. Now we're hearing, then it was 24 months. And now we're hearing that it might even be wise to kind of shore up enough capital to last out, 36 months potentially. Unclear where how the markets are going to react, and unclear how long some of this is actually going to last. But I do think it's wise and prudent to to make sure that you as a business have thought through the downside scenarios, because again, as a startup, the downside scenario, you never want to put yourself in a position where you're kind of like, you have very little runway and you haven't hit your milestones and now you have to go out into the market, because I just don't think the market's going to be friendly to those type of companies going forward. And so, Justine and I have been thinking a lot about how do we extend our runway, and obviously, how you want to trim the excess fat wherever you have it, which is a no-brainer. But also, once you're down to that sort of minimal burn, like what are the additional things that we can do, in order to bring in revenue sooner, in order to kind of extend the runway that we do have, and potentially even go out to our existing investors and say, does it make sense for us to sort of bring on additional capital sooner to give ourselves that additional runway?
Do you feel that you've changed even in the last, I don't know, couple weeks, months? Are you hiring slower? Are you not spending as much on marketing, ads, stuff like that? Like, what little levers are you adjusting kind of on a high level?
We've been in a pretty fortunate position, I would say, in that from a business perspective, we've never really had to rely very heavily on marketing. In fact, Kindred, the way that we expand or the way that we grow is through member referrals and through zero CAC methods. So I think marketing for us has historically never been a problem. But even then, yes. So anecdotally, we have heard a lot of our founder friends who are ramping down marketing pretty aggressively in order to kind of like trim the fat, as we said, and cut that burn. In terms of hiring, I think we just took a look at our hiring plan and said, what are the essential roles that we need to hire for? And I think one shift that we did make is we said, how do we think about sustainable growth versus staffing up for that growth, right? So maybe we automate things sooner and we spend that time, maybe we wouldn't have necessarily automated some of those components as early as we're now planning to, because, because operational efficiency wasn't necessarily the focus in that period of time, because we were trying to hit some of those top line numbers. But now really kind of thinking around how to, maybe there are some things that it makes sense for us to think about operational efficiency before we even scale to the next step or take that next step. Anything to add there, Justine?
I would just add that the vibe has gotten more dire literally within the past maybe 5 to 7 days.
Mm-hmm.
Like, it's a really interesting time to be talking to you, because like 14 days ago, we were like, it felt meaningfully different in terms of like the tenor in our conversations with our investors. And we have, we're chatting with a number of different VCs that have, this is Andreessen and also Bessemer and Ray Tonsing and Bach Group. And so like, we have a lot of data points here. And the tenor has changed within the past 5 to 6 days. People for a while were like, "Ooh, something might be coming, inflation, be cautious." But literally within the past 5 or 6 days, it feels a little bit like the people have been saying, actually, we hope it doesn't come to this, but you need to be prepared for a like .com crash era, like esque kind of like freezing of venture capital liquidity to that.
Interesting. Well, I want to end on a happy note. I have all kinds of thoughts about that too, because we heard that doom and gloom, at the start of the pandemic.
Yeah.
And all the VCs were saying store away cash for 24 months, and then 4 months later, was boom time again. It's hard to interpret, right?
It's
but
very
anyway,
hard.
People want to learn more, and can they sign up and actually get on either a wait list, or can they jump right into it? It's Get Kindred, right? Live Kindred. Sorry. I'm sorry. Live Kindred.
No worries. It's livekindred.com. We're accepting applications right now. So anybody can join the wait list. If you have a friend who is a Kindred member, they can refer you, and that'll kind of pop you to the top of the wait list. But we are growing. And I think, as we were mentioning, in a time of economic uncertainty, I think a lot of people are interested in ways to make their dollar stretch a little bit further. So I think we're planning on it being still a really big summer for travel, because the demand is high. The cost of travel traditionally is also very high. And so a lot of people want to find ways to, take 10 trips for the price of one. And so we're excited to help people find a lot of fabulous and convenient, smooth, trusted home swaps.
Your timing actually could be really good. Just with, I mean, it's kind of funny how
Yeah.
you're sort of counter cyclical in some ways. So, all right, livekindred.com. Awesome. Thank you so much, Justine, Tas. This is fun, interesting stuff. I love the founder dating stuff. I like that little segment. So, thanks so much
for having us.
Yeah, good luck. I'm going to send this to my wife. She's the decision maker in the family on things like this, but it'd be fun to swap out our house.
Awesome.
All right, ladies, thank you. Have a great week.
Take care.
Bye, you too.